Everywhere you look, the signs are telling you to spend less. Prices are still stubbornly high, and interest rates have made borrowing a nightmare for many. And yet, Americans are spending more than ever, making up nearly 70% of the entire US economy. This isn't just a fleeting trend, it's a massive economic mystery. US consumer spending even continued its climb in the second quarter of 2025. So what's really going on? What powerful forces and hidden habits are keeping our wallets open when every logical sign says they should be slammed shut? The story is far more complex than you think, and the answer reveals a fault line running right through the American economy. Today, we're getting to the bottom of the unshakable US consumer. Section 1. The investigation. The pandemic echo. To figure out what's happening now, we have to rewind a bit. The first explanation for this spending spree was the mountain of cash we all saved during the pandemic. Think about it, government stimulus checks hit our bank accounts, but with everything shut down, there was nowhere to spend it. That created a massive financial cushion, allowing people to absorb the initial shock of inflation. But that can't be the whole story. For many, that cushion is long gone. So, if the savings are dwindling, what's still fueling the fire? Well, the data points to a couple of things. First, a surprisingly resilient job market has kept paychecks relatively steady for a lot of people, providing a crucial safety net against rising prices. This has kept just enough confidence in the air to prevent a total spending shutdown. But steady paychecks for some isn't enough to explain the sheer force of spending we're seeing. That brings us to the next piece of the puzzle, debt. But maybe not the kind you're thinking of. Section 2, the investigation, the modern debt engine. Yep, debt. And while traditional credit card balances are climbing, there's a new player in the game: buy now, pay later. These services have absolutely exploded in popularity, especially with Gen Z and millennial shoppers. They let you break down big purchases into smaller, often interest-free installments, which makes that new TV or vacation feel much more attainable without the immediate gut punch of a huge credit card bill. This digital convenience has become a powerful, almost invisible, engine for spending, letting us keep shopping even when cash is tight. At the same time, we're seeing some strange behavioral shifts. Some people are trading down, swapping brand names for generic labels just to get by. You've probably noticed sales of budget-friendly foods like Hamburger Helper and canned goods have surged. But then you have others, particularly younger generations, who are going all in on experiences like travel and dining out, things that were denied to them during the lockdowns. This wild mix of penny pinching and priority shifting adds another layer to the mystery. But it still doesn't quite solve it. Section 3, the revelation, the great divide. The real aha moment happens when you realize there's no such thing as the US consumer. The truth is, we're living in a tale of two economies. The unshakable consumer isn't everyone. In fact, a huge chunk of this relentless spending is being driven by one specific group, the highest income households. While most lower and middle income families are cutting back, delaying purchases, and switching to cheaper alternatives, affluent households are still spending, propped up by gains in their wealth. This top 20% is disproportionately driving the strong headline numbers you see on the news. They're less bothered by high interest rates and are using their wealth to spend on services, travel, and luxury goods. For a few years now, they're the ones who have been propelling overall spending growth. Interestingly, the economic contribution from all that spending has recently been matched by a completely different force: massive investment in new data centers. So, while a majority of Americans report living paycheck to paycheck, a powerful minority has kept the economic engine roaring. This isn't a story about universal resilience, it's a story about concentrated wealth. If this breakdown gave you a new way to look at the economy, do us a favor and hit that like button and subscribe for more deep dives just like this. And let us know in the comments, are you feeling this economic resilience, or are you feeling the pinch? So, there it is. The mystery of the unshakable consumer isn't an illusion, but it is misleading. The resilience is real, but it's fragile, propped up by a wealthy minority and new, easy forms of debt. And that creates a profound risk for the entire economy. What happens if the stock market stumbles, or if that high-income consumer finally decides to pull back? An economy that looks strong on the surface could suddenly find itself on much shakier ground than anyone realized. The unshakable consumer is, in reality, a story of a widening divide.